Hello, everybody. It's another Monday. And I am Patrick Kofi Awesome with Mojo Up, and we are here for Maker Monday. I'll be doing your broadcast, and of course, we have James here. How you doing there, James?
I'm doing great. It's Monday. I get to talk to you. Get to talk to another awesome guest. Welcome to Maker Monday. Without further ado, let me introduce James Carter. I've had quite a few conversation or two with him about stuff, and he's super knowledgeable and super fun to talk to. So I'm excited about it tonight. Not to set you up too much, James, but can you go ahead and just tell us kind of your background or like what you do?
Sure. So, just to give you a little bit of insight as to what I do now, I'm full-time investing. But my background has been one of doing a lot of online marketing. And so, what led me into investing was I created a lot of information products, sell information products online. And that led me into looking for ways to kind of grow the money that I was making, which led me into currency trading or Forex, which now has translated into the crypto market, which is where I'm currently focused now. So that's pretty much in a nutshell what I've been doing and do now.
Yeah,
Okay.
cryptocurrency, the
So
volatility.
yeah. So I know a lot of people out there are very, very like intro to crypto. Like they've heard of crypto. Some people think it's not here to stay. Some people think it's a fad. Some people think it's a pyramid scheme or whatever. Personally, I feel like it's here to stay for a while in some way. But the other thing you mentioned too is like the forex market. I know a lot of people don't know what that is. Really, until I talk to you, I'm gonna go back and ask you all these basic ask questions that like I had to ask you when you were saying stuff the first time that we talked. Hopefully on here because this is, I mean, really, there's a lot of people who are watching this and may not know what the forex market is, things like that. Which reminds me, if you are out there watching, feel free
Yes.
throw your questions in the chat, and we'll say this again about halfway through too. Put your
Sure.
questions in the chat or the chat wherever the chat is for you, and we will ask James to explain what's going on. But with that being said, so for crypto, um, can you tell me why you think it's like a good investment, or if it's here to stay, or what are your thoughts?
Well, I'll tell you. Let's back up for a moment.
Okay. Oh yeah.
It was pretty much Bitcoin was a thing. It was like a fad, or people thought in 2012 when it first like kind of came on the scene. Um, but I'm probably going to say some things that are going to seem a bit philosophical, but they're true. First of all, money is what we decided is. So at one point, like beads were money, things like that. So whatever we give value to or we use as a place to store value, that's what money is. All right. So back in 2012, when Bitcoin was kind of, in its infancy and things like that, people were like, it is what it is. But what most people don't know is that back in, I want to say 2007, there was another version of digital currency that preceded all of this, and it was called like e-gold and things like that. And believe it or not, it was becoming very popular, particularly in the online space. And the the guy that had it, like the feds, like stormed his office and took all his stuff, and they shut it down, whatever, right? So 2012, Bitcoin comes on the scene. It's kind of a fad, things like that, and it's growing a little bit by popularity. In 2015, it picks up like a little bit of value. So people had bought it for like I think like 5 cent a coin, right? This just blow your mind, right? Like people had spent like $1,000 and bought like 5 cent a coin, right? And then in like 2015, it might have got up to like maybe it was worth $100 or something per coin, something like that. So there was a lot of money to be made in that. That was a great return. But there are people who bought it at like cheap, like $10 a coin, man, and like bought a ton of them. And then in 2017 is when like the dam broke, where it just like took off like crazy. And that's when you had the Bitcoin bull run, where it had got us coming into 2018, it had got as high as $20,000 per coin. Now you have to put the math behind that. You spent $1,000 and bought it like $10 coin, you got 100 of those. those people that spent $1,000 and like in a matter of like 6 months, they were like millionaires and things like that, right? People who, believe it or not, when the whole thing started taking off, and then we had talked about this, there were people who were taking their college aid, their aid checks, right? With their student aid, student loan checks, and buying Bitcoin. And this is crazy. In like 4 weeks, man, they had like six figures or something like that, right? So that's the first part of it. Okay. The second part of it, why I think it is something, is because of the populace and how the populace views it now. And the third point is really going to be the key factor to let you know that it's here to stay. But it's how the populace views it. Okay, when you had the bull run happening, it was everybody and their mama. You know, hey, you need to buy Bitcoin, you need to buy Bitcoin. And when that starts happening, you know, particularly when there's opportunity for wealth, and you take into account that people are always trying to like have some level of freedom, particularly from the rat race and things like that, it's going to attract, you know, a number of people. It's going to attract two types of people. One is going to attract the people who are desperate for freedom. And then two is going to attract the people who have money and are looking to grow that money without, you know, being able to do something. And in that second group, you have people who are nefarious and things like that, institutions and things like that. So that's the second part. All right, now here's the third part. When it started taking off in 2017 and everybody was trying to get involved, you had the banks, particularly in the US, they started making it difficult for you to buy it. Because one of the big things with crypto, if you like went on any of these groups and things like that, the biggest thing was that people were saying we're going to take back the power of our banking, right? We're going to take back the power of our banking. Now, if you know anything about history, it's pretty much the banks that control everything. Like even if you have a war, the banks will fund like both sides of the war, you know, and make money from it. If they want to, this is sad, but it's true. If they want to boost an economy, a lot of times they start a war. Things like that. So people don't like that. Also, they don't like the fact that the bank will give me 0.05% interest on my money, but then turn around and every month in the Forex market will make at least 20% off my money every month. The other thing about the banking industry is that with us getting off of the gold standard, they have passed laws where it makes it legal for them, even though this is not right, but this is how it works, where they only have to have 10% of deposits on hand. So that means that if they want to lend out $1 million, they only have to have $100,000 in the bank. That's all they have to have. Now, here's where it gets really dirty, is that means they have $900,000 that they can loan out. Now, me and you go to them and say, okay, we want to buy a house. So they say, okay, fine, we'll give you, you know, you say, I want to buy, I'm just going to round it up. I want to buy a house for $900,000. They say, okay, great, we'll give you the loan. Now they have just loaned out $900,000, which now gives them the right to have 8.1 million more that they can loan out or whatever, because they only need to have that $900,000, which is now 10%. The way it works is kind of funky. So it gives them a chance to make infinite accelerated wealth while at the same time making sure that you like never can keep up with them. And with the click of a button, they can have as much money as they want, which I don't understand how that's not counterfeit. But when you do it, we go to jail. So like the thing with crypto was to say that people like rally cry was we're going to take back the power of our banking. And so, you know, banks couldn't have that. So you wanted to, this strange thing, I know I'm getting on the soapbox, but I got to set the scene. You want to buy crypto, you couldn't like just take your debit card and like go buy it. You couldn't, it was like the banks was blocking it like everywhere. But you want to gamble and go to Vegas, no problem. Lose all your money. And they were saying things like, you know, we want to protect people. It's like, you don't protect anybody from Vegas, but okay. So here's where I say now that this is a pillar that is being established in our society. And the reason I say that is because the banks are now adopting it. And with the banks adopting it, you now have, when you see Congress making crypto executives testify on Capitol Hill, now you know it's a serious thing. And that's what you've had over the last, you know, like maybe like a couple of months or so or something like that, maybe a month or two ago. When that starts happening, it's a serious thing. And the biggest thing that they were that they were worried about and concerned about is how is it going to undermine the value of the world reserve currency, which is the dollar. And in my opinion, um, it's probably a good thing to do it, because with the current government and systems we have in place now, they have literally done things to devalue the dollar. So if you look today, just go into the store today, your dollar does not buy what it used to buy even a year ago.
Right.
So now you have it where people are saying, hey, why should I put my money with you? And you're going to tell me when I can borrow it, if I can borrow it, and how much of it I can borrow, and you're going to charge me what you think I should be charged for interest for borrowing my money, right? Versus now going over to crypto, where you have the blockchain technology, and then you have smart contracts that I don't have to wait a week for a transaction to work through. It's like, hey, if me and you want to transact, we can do it in minutes, and pretty much like the smart contract handles everything. So
and hold up. And there's
Mhm.
no like banking fees, right? Or anything like that with it?
Well, you have something called gas fees.
Yeah.
But,
There's gas fees,
yeah.
but there's not the overdraft fees that banks
Oh
hit you with
no,
and all that
no,
shit,
no,
right?
no,
Yeah,
no,
okay. Just throwing it
no,
out there because while we're on the soapbox, I want to hit them with everything. All right,
no.
go on.
So it is the future right now, though it's still a wild west, because the downfall of it is that a lot of these protocols don't have like a customer service type of thing. So you have to be like careful in what you're doing, because if you put that money out, the thing with the blockchain is that it's supposed to make it where it's like a unhackable kind of setup, because all the transactions happens in stacks or blocks. So if my transaction is here and they wanted to like try and hack it, you got to try and go through all these different what's things, which is almost practically unhackable. The downside of it right now, though, is that there's not a like true customer service thing in place, so that if you make a mistake in a lot of cases, particularly in decentralized finance, which is DeFi, if you make a mistake, the money's gone.
It's
So you have to
dumb.
be very careful. Yeah, you got to be very careful, what you're doing in the decentralized part, which is, things like you see. We'll talk about that in a moment. But you now have regulated centralized finance in crypto, which is like your Coinbase, Binance US, things like that, which is another way of the government trying to get involved to make sure that they can, kind of get some tax money, because with crypto, uh, because they have the way that they have categorized it with the rulers and things like that, is to be treated like capital gain tax if you convert it into fiat currency. And now there are people that's basically like not paying any tax on it at all, because you have protocols that says, hey, instead of converting it into fiat currency, you can stake it with us, and what we'll do is we'll give you a loan based on it. And so you never take it out of the crypto sphere, so to speak. You just keep your cryptocurrency and take a loan against it, and never really pay like the capital gain tax on it. So that's a big deal for the government. When you see the government getting involved like they are, when you see the banks now starting to do crypto products, where like I think Bank of America, they like got one that's like they'll give you 8% a year or something on it. That's when you know that it's serious. So.
That is a fantastic explanation, first of all. And secondly, that is for anybody watching out there, they might be like, what is going on? Yeah, no, that's very, very accurate in a lot of ways, right? Where we are getting screwed over by people, which is part of what people were doing, was getting fed up and making crypto. So, but James, can you in layman's terms, I guess, tell us how crypto actually works? Right, like if for people who are scared of it, right? And I mean, I know for a while I was like, this doesn't make sense. This isn't. I can't pull out my actual physical wallet and make it work, right? And how does crypto work?
Well, there's a number of things that go into it. So you have things that you have like different protocols, tokens, coins, and all those kind of things. And it works the same way like it works with regular money. It's just that instead of you pulling a dollar out of your wallet, you have a digital wallet. And so, like if you use PayPal or Vimo or Cash App or something like that. It's kind of along the same lines. It's just a matter of you and the other party deciding what you're going to transact in. So, for example, if I wanted to buy a costume from you, James, and we wanted to, exchange money in PayPal, I could send you the funds via PayPal. Now, we cannot look into the computer and see like physical dollars, right? But we have done that exchange, right? And
Yeah,
you
right.
now you can take that money and do what you want to do. It's the same thing with crypto. The only difference is that there are so many coins and tokens that we might have to, we may not even have to agree on what token is the best, but there are ways to say, okay, look, I got Ethereum, you want BNB, Binance, okay, I have to convert that over to Binance coin, BNB coin, and then pay you that way. And so now instead of like PayPal, the money actually goes into your digital wallet, which most people use something like it's called MetaMask or Trust Wallet, which is right on your computer. So, and then there's hardware wallets and stuff like that too, but that's for another.
Yeah, no, that's good. So a lot of it, and what I got from it too, is that it is a lot like PayPal. Sorry, excuse me, and it's like Coinbase, I think is what it's called.
Right.
And that's the regulated cryptocurrency. Where if I lose my password, I'm not going to be out all this money. I can call them, and there's some type of tech support, right? That's what you're talking about. And then there's the other side, which is the deregulated. How exactly does that work, or how's that different?
It's called DeFi, which is short for decentralized finance.
Okay.
And now with DeFi, that's where you got to be careful, because this is a wild west. And basically what there is there's two parties, and then there are protocols, and the protocols have something called a smart contract, and this is just a computer code that runs everything. And so most times you'll have a team behind the project, but it's not like if something goes wrong, there's 1-800 number you can call or something like that. The smart contract pretty much handles everything. So that's why it's decentralized, meaning that there's really no authority that's over. A lot of times in some of the protocols, what will happen is the protocol is built in a way that the people decide what's going to happen with it. And the way you do this is by adding something called liquidity to it. So, for example, if I believe in a project so much and I want to see it like grow to a certain point, then I would say, okay, all right, I'm gonna add $10,000 to it. And in doing that, it gives me more voting power for the developers to take the vision where I want it to go and things like that. So you have that, but you don't have it yet. I'll say it this way. I believe it is coming. You don't have it yet where these people have created this protocol, and if something's wrong, I can like get on the phone with somebody. You don't have that yet, but I do believe that is coming. However, there are some that do have like chats and things like that, and email support and things like that. But like I said, it's still in its infancy, so there's a lot to work through. And then, to be honest, there are some that they're just scams. So you got to know how to navigate that too. So, and there's things you can do to do that when you're using your digital wallet. If you don't have a lot of money, or even if you have a lot of money, one of the things I tell people when they're just starting out is like, I don't care if you got a lot of money, like don't just start with a little bit, because you're gonna run into problems, you're gonna bump your head, you're gonna get scammed probably because you don't know what you're doing, and then there's people that it's like a wild west. So people they're looking for opportunity. I'll give you one thing that happened to me when I was first starting out. I didn't know this, and I'm fine with this. I'm glad this happened to me at this level before I like really wrapped it up. But I got scammed on like $1,000 because I had invested in this one coin that it like took off, and this is one of the facets of that you can do in DeFi. Like you can buy this coin at like a fraction of a penny, right? And if it's like momentum behind it, man, this is the crazy part, is that you spend like $100 buying this coin. It's like a fraction of a penny, right? And then like in a matter of 2 weeks, man, the coin goes up to like 20 cents and your $100 is now like 22 grand or something like that, right? It takes a lot to find these, but it does happen. And so I had like gotten to this one that I thought was going to be, like decent short term. And the way that they wrote the contract was that it does something where it gives you rewards, but it was weird. It diminished the amount of tokens I had in my wallet. And so it was designed to get you to go to the Telegram group and ask about the situation. And because so many people, let me put a pin in that to lay this foundation. And we'll come around to the money thing later, but you have to think about the state of people that if it's true that 5% owns 95% of the wealth, then that means that 9 out of 10 people are going to have a certain mentality about money. And that means that a lot of people, they're going to be desperate for it. But they're going to be desperate to get out of the situation they're in. Reason being is because we were created in a way we were created not to be ruled externally, if I can say it that way. We were created to be ruled internally. And we were created in a way that we are always looking for a utopia because we know it exists. All right. So in the confines of this system that we live in called the world, people are going to look for that utopia because it's in their programming. That's why people try and move to better neighborhoods, go to get, their kids to better schools, because we know deep down in the ancestry of our spirit, we know that exists, right? Unfortunately, this is manipulated against us. And so now it makes people desperate for it. And one saying that one guy said to me is that desperation makes a wise person do foolish things. So you don't think straight, you don't make the best judgments. So you're going to, instead of being wise with money or an investor, you're going to start gambling. And there's a difference between managing risk and gambling. And so that's what starts to happen with, a lot of these projects is that people hype it up and, people like just hoping for like a lottery fix and they just like lose their money. So I was, figuring some things out here. And so then I get on with, I go to the Telegram group and I'm like, hey, what's up? I bought this token. It's up here. I should be able to cash out. And so when I did it in the Telegram group, they had like blocked me out the Telegram group. And then a private chat opens up and it says customer support. And so I'm thinking like, oh, okay, all right. So like somebody wants to like help me, personally. So they was like, hey, we have to validate your wallet. Now, if you're watching and listening to this, one thing you have to understand, no matter what, under any circumstances, when you set up a digital wallet to work in crypto, you are to never give out your passphrase because it allows people to import your wallet anywhere in the world. All right. I didn't know this. So here's how the scam worked. They get on with me. They act like they're customer support. And they're like, hey, we need to validate your wallet to make sure that it's working correctly. And I'm like, okay, all right, because I'm thinking like, okay, there's something wrong with the contract or something like that. And what wound up happening is that they send me to a website and they say, we can't see the words, but you need to enter it in here for us to validate it. There's a QR code, right? And I'm like, okay. So I do it. And they was like, okay, give us a minute to validate it. And I'm sitting there like 5 minutes go by, like nobody replies after that. And then it hits me like, oh my gosh, I think I just got scammed. And so I go into my wallet, all the money's gone, right? Now, that was $1,000. Where I am currently in life, I'm not too bummed about that, particularly with in this space. I had a lot of people, you watch a lot of YouTube videos, stuff like that. I'm gonna tell you right now, a lot of people don't know what they're talking about. So for me, it's like a lot of this is like, okay, I need to figure this out myself. So I'm just gonna test with, small amount of money and things like that. So I'm not bummed about it because I can get $1,000 like that. But it was an eye opener. And I know people that have lost like 30, 40 grand, stuff like that. And these are the things that you have to navigate when you're doing it. Now, with situations like that, this is where you have to start allocating your money. All right. So you have to say, okay, first thing is if you're going to really start playing heavily, and even if you're not, just to build the habit, you should attach a physical wallet, a hardware wallet, to your digital wallet. Because when you do that, if you do a transaction in your digital wallet, you have to confirm it with the hardware wallet. And so if I would have had a hardware wallet with that, if they'd have tried to move the money, they wouldn't have been able to do it because I would have had the hardware wallet and said, no, I don't confirm that transaction. All right. So you should do that. And that, like, you can get one for like 50, 60 bucks online or something like that. But bringing it full circle, these are the things that you have to navigate now. Personally, I believe that with where society is headed, and things that are coming very rapidly on the planet, you see the signs of it. I think that this is the future of money, and I think that everybody is going to have to be involved in it one way or another.
Yeah. So, and that actually brings me right around to my next point or question is like when I was talking to you, I was like, hey, a lot of people, not a lot of people, but some people have reached out to me and said, hey, I'd love to pay you in cryptocurrency rather like just the same way as you have PayPal. And I'm like, man, I don't know how to accept that right now. And I don't really know if I want to feel if I'm comfortable with accepting, a couple $1,000s in crypto.
Right.
And I'm probably not alone here. So what would you say to somebody who doesn't have any crypto right now, like myself, who's just like, hey, like, how do I, as a business, prepare for that next level, like you just said, and go from there?
Okay, the easiest way to do it is, particularly if you're in the States, is just to sign up for a Coinbase account. Okay, Coinbase has actually made it better and easier for people to get to accept crypto as payments. So that's it's super simple when you do it with Coinbase. Now, the one thing that people worry about is like, okay, somebody say, hey, all right, I want to, like, in your business, like, okay, I want to buy these props, right? And you're like, okay, that's 5Gs, it's $5,000, but I got it in Bitcoin. And you're like, well, I don't know about that because I don't really mess with that. Well, here's the thing what you probably don't know also, like, for example, like I do some coaching in this space and it's, high level, high ticket coaching. And one lady was like, hey, I bought Ethereum and Bitcoin. It's like, I bought Ethereum and Bitcoin. I bought Ethereum. And for those who don't know, Ethereum is like the second like major coin behind Bitcoin. Right now it's at like probably 3,000 per coin. It got as high as 4,000 per coin. But it's vacillating now between like 2,700 and 3,000. But she had bought it at like around $131. All right. So she has made money from this thing many times over. She's like paid for like housing renovations, all that kind of stuff, right? So she's like, hey, I want you to do a presentation. She's like, I want you to teach me what you know. Can I just pay you this way? And it's like, okay, all right. For me, it's like, yeah, cool, right? But what most people are afraid of is the fluctuation of price with Bitcoin or any of these coins, anything like that. And we'll take a look in a moment on the screen. But the thing that they've also introduced in crypto is something called stable coins. And these coins are pegged to the US dollar. So they don't really fluctuate in value. So what you can do if you're afraid of like, okay, Bitcoin is $37,000 right now. What if it drops to 29,000 or if it drops to 20,000? Then my $2,000 is now like worth $1,100. Well, what you can do is you can immediately, there's two ways you can go about it. You can, if somebody pays you in Bitcoin and you get that into your Coinbase account, you can immediately convert that into a stable coin so that you're not, affected by the fluctuation, right? Now, there's a small fee to do that inside of Coinbase. That, of course, they got to get their money. Or you can just have them they can convert it in their account to a stable coin and then just send you that. So the way it works is that if you go inside your your Coinbase account, you can do this on your mobile or you can do it on a computer. You only need to give them the wallet address. And all you need to do is click on where it says receive, and it'll tell you, okay, hey, here's the address. You simply click, copy that, send that to them. They send you the thing and you're done. So it's not as scary as people think it is. Much like going back to PayPal, if I wanted to, if you didn't set up a payment link, right, then you could just simply say, hey, here's my PayPal email or my PayPal.me, link or whatever, right? Something like that. So it's not as scary as people think, particularly now with the strides that they make.
Yeah, I have Coinbase and I definitely like it, James. It's definitely worth. It's easy, very easy to use.
Yeah, it's definitely Coinbase on my to-do list, my short list of what to set up here soon. I I had another question come up during that. So you mentioned like you can get screwed over by it fluctuating, but you can also go up, of course, right? So like if
Yes.
you paid you, but
Yes.
how I guess exactly how often or how fast does it or how much I guess can a Bitcoin or something like that fluctuate each day? Like is it like, hey, you paid me and I didn't do it that hour and it fluctuates way down, and I get screwed over or win money? Like it's not win money, but it goes up in value.
Right.
Uh,
Right.
yeah, like how fast that happen?
Um, Man, how deep y'all want to go? Y'all want to go down the rabbit hole like real quick?
I mean, I
We
kind of want to go
totally
down
want to go down the rabbit hole.
Yeah, let's go.
Okay. All right. Okay. All right. Okay. Right now, okay. You have in the markets you have three ways the market can move. It can trend up, trend down, or give us the rabbit holes, or it can go sideways. Right now we're in sideways action. Okay. All right. Okay. We're gonna go really deep now. The Oh no. You know what? Okay. All right. Let's do it. Let's do it. All right. Okay. My background stems from forex trading, which is currency trading. Okay, which is what the banks do. All right. I was fortunate enough to learn from some people who was in that industry. I started back in '07. Made my mistakes, lost a lot of money doing it, but learned a lot. And the things I learned have helped me transition over to crypto. Let me bring you up to speed now how I got here at crypto. All right. Okay. So back in '07, I'm trading Forex. All right. So Forex is where the banks, like if you have like Lehman Brothers or these major institutions, like they may see a market like over in Asia that they want to get involved in, right? But they can't use US dollars. They have to convert it to the yen or something like that. So they call the bank and say, hey, listen, we want to get involved in the market, convert $500 million to the yen. And the bank can't tell them no because the bank is, that's one of their best customers. So the bank is like, okay, we got to convert $500 million to the yen. Well, the bank is also going to try and make some money on that. Now, in the Forex market, it's a zero-sum game, meaning in order for somebody to win, somebody else has to lose. A lot of times it is the banks or the market makers or these big institutions that are eating up the little guy, all right? Because going back to the thing I talked about with money and people being desperate, they know that, so they do things to manipulate the market, all right? Okay, so they want to get involved in that. The banks have to convert, and it's like, okay, they got to do it. Now, the banks normally convert money it's a 24-hour, 5-day-a-week market, but the banks only really convert money around certain times, in between 1 and 3 a.m., which is the European session, in between 7 and 11 a.m., which is the US session, and then in between 6 and 8 p.m., which is the Asia session. Okay. Now, with them doing this, you'll see the market move, all right, and then it'll just like go silent, okay, and then you will have things that affect the market, like the news. This is called fundamental analysis, all right, and so like unfortunately, like there was a terrorist attack like a long time ago in London, and instantly it made the pound's value drop, right? Things like that. Okay. Now, why do I mention this? We've already established that people have decided they're taking back the power of the banks. We've also established that the banks don't want that, because if the banks lose their power, what leverage do you have over society, right? Okay, the people now control their own power of lending and stuff like that. It's like, what are we gonna listen to you for, right? Okay, so now it makes crypto very interesting, because if you listen to one of the executives testify during the Capitol Hill thing, he says 80% of people have not sold Bitcoin. So that means that these people believe in this. So no matter what it's been doing, like, man, I'm holding it. I'm not letting it go, right? Okay, all right. So now you have to try and scare people out of it. And how do you do that? Well, you start to flood into it and set up systems where you can short it or sell it. All right. So now you try and take money from the banking industry and you try and filter it into crypto to try and manipulate the market. The unfortunate thing is that people believe in it so strongly, it is very difficult for them to manipulate crypto like they can stocks or the Forex market or something like that. No matter what they do, it's not like people are like, oh my gosh, Bitcoin was 69,000 back in May. Now it's 37,000. I need to get out. Some people are going to do that. Some people are saying, man, Bitcoin's on sale. And they're just like, just like loading up more and more, which is making it like, stay stable, right? So you have the market is going to trend up, it's going to trend down, or it's going to go sideways. This is three phases of the market that it always goes through. Right now we're in a sideways market. Okay, so I'm going to show you on screen. I'm going to share my screen. Give me a minute. Let me pull it up here. All right. Get rid of this. Get rid of this. Okay, let me. Where is it? Okay. Sorry, I got two screens going here.
Okay, yeah, it's right down the bottom, the share screen.
Yeah. That's what. Yeah, I'm just trying to separate it. Okay, there we go.
Yeah.
All right. Okay, let me know if you guys can see my screen.
We can. It's
okay. All right. Cool.
It's like
all right.
little right. Kofi, can we make that bigger? There we go. You got it. All right.
Okay. So this is Bitcoin right now, right? And I'm on a 15-minute chart. As a matter of fact, let me go out into a higher time frame just to kind of show you. Okay. So if you don't know anything about candlesticks, all right, this is how you interpret price in the market, all right? And basically the candle tells you what happened for that time period. Right now, we're looking at what's called a daily chart. So each one of these candles represents 1 day's worth of data in the market. Okay, all right. So this has been like the last maybe a couple of months. So you had this move up and like this push down. Okay. Here's the thing right now. Going back to what you asked, James. Like, how do you know if it's going to go up or go down? Like, does it fluctuate a lot? Yeah, it does, as you can see right here on the screen. Okay, but these things are here because this is what the overall market thinks about it. All right. So I want to show you something, and this is as high as Bitcoin has ever got, and this was in November. This is right below $70,000. Okay. All right. Now I'm gonna go into some technical analysis stuff to show you. Right now it's at $37,000. Okay. Now this is more trading stuff, but if you guys are into it, I'll share it. Okay. Okay. All right. Cool. All right. So this is right around $37,000. Okay. If you see this right here, see how this got as low as this? It's right at $32,000. All right. Now, if you look right here, this is around 42,000. Now, I want you to notice this really long line right here. Okay. I'm going to move my mouse out of it. As a matter of fact, I'm going to zoom in so you can see it. Okay. So you see this really long line right here. Now, I have these candles set to red and green, which basically is what's called, we refer to a bear candle and a bull candle. A bear means that it opened at a higher price, and closed at a lower price. And a bull candle, it's in reverse. It opened at a lower price and closed at a higher price. All right. The wicks tell you how high and how low it got during that time frame. So in this particular candle, it got as low as this point, price got as low as this point, and it got as high as this point. Okay. Now, when you see something like this, a long wick, it means that price got it during this day, price came all the way down here, and then it shot up. When you see this in this particular instance, it means that there was a lot of people interested in buying around here. Okay, that's why it shot up like this. Okay, now I'm gonna show you something. All right, this is right around $42,000. Right, this is December of last year. All right, now let's zoom out. You look for areas in where the market responds. And I don't have time to go into like psychology and numbers and things like that. But looking at this chart, I knew at the beginning of the year, okay, that $40,000 was a big deal. All right, this is the beginning of January. And if you can see here how the market's moving up, this is the market trending up. And then it got right around $40,000, right around that 42,000. And look at what happened. So when you see stuff like this, right, where the market pauses, you need to pay attention to that. Now, me putting these lines on the chart, now it is easier for you to see this, right? Okay. So I know that whatever this price is here, that's areas I need to watch out for. So if going now, bringing it back full speed to full circle to what James said, if somebody wants to pay me in Bitcoin around here, I probably need to convert that to to USD, right? Because I know that right around 40,000, if the market's below 40,000 and it's going up to 40,000, I know that the market's probably going to reject that. But if somebody pays me in Bitcoin around here, I probably want to hold it because I know that around 30,000, people are thinking that Bitcoin's too cheap. Now, this was in January, all right? This is January. This right here is May, all right? Now, let's go all the way to where we are now. Watch. See how these lines, how price reacts around there? It's doing the same thing here. See? So that's like more technical analysis, but when you have this type of information, then it's like, okay, like the lady that was like, hey, I just want to pay you in X, Y, Z. I'm looking at the chart and saying, okay, where am I at in the market? And she wants to pay me here. I'm like, okay, I'm converting that. As soon as I get it, I'm converting that to a stable coin. She wants to pay me here, I'm holding it, right? And
Okay.
and it's not that it's always perfect, but it's just managing risk. Now,
Right.
you can do a number of things. You can, if you want, you can say I'm gonna hold a piece of it, and I'll convert the other part too, right? If you want, all right. So to answer your question, yes, you can. You could have got paid here in Coinbase, and you could have your $2,000 would now be 2,200, something like that. And I've had that happen to me, where it's like somebody's like paid me 4,000 for coaching, and it's like by the time the transaction was done, my 4,000 was like 4,500, something like that. So it's just knowing these key levels in the market, which that's a whole nother.
So I gotta ask, like, this information that's in front of you right now, can I go there and look at that same thing, or is it someplace you've paid
you
for?
You can do this. If you go right here, it's tradingview.com.
Traderview.com.
Tradingview.com. All right. They have a free version. You just go up here to chart.
Mm-hmm.
All right. And you click on chart, and then whatever you want to look at, you just type in this. Let me show you how I did that. I'll go up here to the symbol. I can type in anything. If I want to look at Ethereum, like somebody said, I want to pay you in Ethereum. Ethereum versus the US dollar. Same thing. So you can look at all of this, if you want. The key though is looking at the higher time frames. Like if you're looking at like lower time frames, that's not going to give you, as accurate of like, how the market reacts to certain areas. So yeah, you could do that. This is free. And if you were getting like into trading, like using indicators and stuff like that, which that's another topic, you can use up to 3 indicators to help with that.
No, that's cool. That's very good to know.
Mm-hmm.
All right.
Let me continue. Okay.
For sure.
Because Kale said to go down the rabbit hole. So let's. I want to show you something. All right. I want to show you like things you have to watch out for. All right. Okay. So Elon Musk, all right, world's richest guy right now. Right. This guy can move markets with just a word. So when he starts talking up stuff, you need to pay attention. All right. Now, back last year, they decided that Tesla was going to accept Bitcoin. All right. When they decided they were going to accept it, it took off like crazy. And then probably a few weeks later, he said, no, we're not going to accept it anymore. Now, what people didn't know or probably didn't understand, that Tesla, not separate from Elon Musk, because he got his own Bitcoin holdings. He's holding, as far as I know, I think he has like 5 billion in Bitcoin. All right. But Tesla has his own Bitcoin holdings. And when he made that announcement, as a matter of fact, let's take a look and see when he did it. March 2021. Okay. All right. So let's take a look at March. It was in this area right here. I think that he said it. What's it here? It was around like 50,000. Oh, I'm sorry. I'm on the theory. Okay. Let me show you. This going crack y'all up. You'll be like, no way. It's like, yeah, man. Okay. All right. So he mentions it. Yep. I still remember this. He mentions it right in here. All right. So let me zoom in and show you this. Let me get rid of these lines. Okay. All right. Okay. So he mentions it right in here where like they're going to accept it. So let's see. What is this? All right. March 2020, the car maker was sub-public. All right. Okay. He mentions it in here in March. All right. And then in April, he decides they're not going to accept it anymore, which is why you had this happen right here. All right. Now, at the point that he mentions it in here, it shoots up. This is why you had this move like this. Right. And then he says they're not going to accept it anymore. When he said it, it was right here in this area. So in between here and here, Tesla made about $150 million off that profit in Bitcoin with the amount that they had. Okay.
Via tweets, right. Basically. Via him tweeting about it.
Now, I'm going to show you something. All right. See how this looks similar? See how the formation looks similar? This,
yeah, for sure,
is Bitcoin. This is Tesla. All right. So see, these are the things that you have to look for, because you have people, and I don't want to really get into conspiracy, but their world doesn't work if everybody's prosperous and successful.
Mm-hmm.
Yeah. You know what I'm saying?
Yeah.
So it is to their benefit to keep you in a certain place. And it is also a way for them to increase and accelerate their wealth. So if you're into trading Tesla, just know that if you see whatever you see happening with Bitcoin, most likely it's the same thing's happening with Tesla. And it's like, okay, that can give you an indication when you might want to get in and out of Tesla as well. But it's the, same thing. He did the same thing with Dogecoin.
Yeah.
Right. First of all, he tanked it.
He hyped it and tanked it all at the same time.
He tanked it when he was on SNL, right?
Yeah,
and they did the Dogecoin skit, and they was like just like pressuring him in the skit, like, what is it? And he was like, it's a hustle. And then it dropped from like 70 cents to like 20 cents or something like that. And then he says that Bitcoin is going to accept Doge, and it went up like 21% in like a day. So these are the things that you have that can affect the price of your crypto or whatever. And go ahead.
Sorry, and to people out there watching, it's not like you have to be scared of crypto. I feel like because Elon Musk might say some shit, right? But the points that you're making, I feel like, James, is the fact that it's crazy that he can do that, and what he says does matter when he does tweet, what he goes on to SNL, the things that does matter as far as some of the things that he's involved with. It's just the same way that like when famous people, like famous politicians specifically, tweet out something, or like you said, there's a terrorist attack someplace, that all affects it too. So just like, I guess to bring it back a little bit, like you don't have to care too much about what exactly he's saying, so long as you're not in that market, though, right? Like,
Well, no,
or is it across the board? Maybe I can be wrong.
No, here's the thing: is that when you start to know these things, you use them to your benefit.
Oh yeah, for sure.
You see what I'm saying? Like for example, we have something in Forex where if there's an institution that has a lot of money and they can move the market, we call sharks. In crypto, they're called whales, right? In the Forex market, if you had $2 million and you bought all of like the euro against the dollar and the market moves 2 points, that's it. There's nothing else you can do, right? So you're now at the mercy of the market. So you don't have enough momentum or enough power to push the market and move the market how you want it to go. So you would be considered a minnow, right? Mm-hmm. The thing is that you don't take on minnow, you don't take on sharks and whales head on. We talked about this.
Yeah.
You swim alongside them.
Definitely. You've got to.
And when they start feeding, because they're sloppy eaters, you get your piece. And then you eventually grow into a bigger player. So like things like this, when he says stuff like that or whoever, it's like, it's I don't know if y'all play chess or not. You know, it's there's checkers and there's chess. The education or indoctrination that we get in school is checkers. It is limited moves. Yep. You can only move a certain number of ways. Whereas chess, the moves are infinite. And the idea is not necessarily that I will know exactly every move you will make. It's to put you in a conundrum. And when you start to understand the game behind the game, then it's like, okay, you let them do the SNL skits, you let them do all that stuff all day, and you just know how to react from it. You know, so it's like when he announced the Dogecoin thing, it was like, okay, here we go. I know what to do now. You know, or if he tweets and says, hey, I'm thinking about like letting Tesla accept Bitcoin again. Okay, that means you're ready to buy Bitcoin because people look to him for authority and knowledge, right?
For sure. I mean, we can see it right here on you're saying it, but we're also proofs in the chart right here. It's for sure a thing.
Yeah. So use that to your benefit. You don't. Yes. That's the thing that and I can't talk about this without talking about like the state of money because it ties together. Particularly if you talk about people being afraid of it. It's like, this is exactly why you need to get involved and you need to start now, because the only reason that people are afraid of it is because you don't understand it. The only reason you don't understand it is because you hide from it. But as with anything, if you go ahead and you begin to immerse yourself in it, you'd be amazed at what you could accomplish. And there's probably no other market on the face of the planet right now that can accelerate wealth for the everyday person like crypto can. And it's the fear and things that's just being perpetuated to scare you out of it. So I really don't think that you have to be scared of it. Alan says, I play chess a lot, but recently played checkers. If you go by tournament rules where you must jump, if you can't, it gets complicated. True that, Alan. That is true. But notice that in checkers, the pieces can only move forward until they get, and they can only jump this way or that way. In chess, the pieces can do almost anything. And that's what I mean by that. There's only no matter how much you can do in checkers, it is limited. And you can eventually count the number of moves you can make. In chess, it is infinite. And trust me when I say this, the game that we're playing is a game of chess. It is not checkers.
Yeah, that's for sure. That's for sure. So I keep seeing my Matic go all over the place, and I'm about to.
Hey, bro. Hey, I love Matic, man. I love Matic, man. I'm all for Matic. You want to take a look at it?
Oh no, I looked this morning. Okay. I try not to look too much. I try not to look too much.
I gotta ask, what the hell's Matic? You guys are all about it.
Okay, all right, okay, all right, okay.
Tell me.
All right, okay. So with right now, you have the blockchain, right? Bitcoin is like the major player. All right, then Ethereum came on. All right, now you have these things called side chains. All right, so when you want to make a transaction, it goes into a series of blocks and completes. Well, Bitcoin, it's a great technology, but it was super slow. All right, so then Ethereum came on to try and speed up transactions, which was great. But now the gas fees that go with Ethereum are just like astronomical. So for you to do a transaction, like if you want to send $3,000 somewhere, you might wind up paying like $200. It's just crazy. And so they're supposed to be coming out with the new like Ethereum or whatever. They're supposed to do away with that, but that's just kind of how it is. So what wound up happening was you have what's called the Ethereum mainnet. Now, I don't want to get too technical. So you have these blockchains, and now based out of Ethereum has made its code available to people, and now these people have created what's called side chains. So they come in, and while being their own blockchain themselves, they also help do some of the heavy lifting of Ethereum, and they do it for like pennies. So like the same transaction that you would have probably done on Ethereum that will cost you $200 on Matic, it could run you like $1.50 or something like that. Now, in order for them to exist, though, they have to have their own token. Like Ethereum is its own token, right? So Matic is its own network. It used to be called Polygon, but it's Matic now, and it's its own network, and that token has a value. Well, a lot of these tokens, almost 100% of them, they follow Bitcoin. So if Bitcoin's up, they're up. If Bitcoin's down, they're down. And right now, we've been in the down market with like Bitcoin. So like Matic and them naturally follow. So I think Matic lasted it's like $1.42. Like in November, it got as high as close to $3 or something like that. So it just depends on where you bought it.
Yeah.
So that's what it is.
So a question just came up in my head. How do people like the people who create these currencies, how do they go ahead and make their money? I mean, it kind of makes sense to me that they would just start off low, keep some of it, hope that it goes up higher, and then just like be able to sell that off. But is that how they do it, or is it a different way?
It depends on what it is that they're doing. But for the most part, the simplest way is that they'll create a currency and they attach it to like something. So like a lending protocol, right? Or some kind of, we call it DApp. It's a decentralized app. It's an application that runs on the decentralized network. And they'll create it. And in order for you to take advantage or get involved with it, you have to buy like that token, right? And then you have to add liquidity to it. And it's a number of things that they do with it. Some of them, they create applications. Some people do it because they're like, they're trying to do like better in the world, and they're like trying to create, like get rid of greenhouse emissions and things like that. So there's like all these like various tokens, but they all work inside of like these main blockchains, right? So probably a good way to say it is that you have the US dollar, but you also have pennies, quarters, things like that. It's all inside the US economy, right? So the way that some of them make their money, the actual protocol, is that they make their monies off of fees. So if you come and you work in their protocol, you do things in their protocol, then like once you transact, they take a percentage like of the fee or something like that. Like there's something that is very popular. It's called prediction games. And you can predict whether or not you think the price is going to go up or go down for something. And if you're right, like you win the payout and things like that. And that protocol takes like 3% of the fee. Well, here's the thing. The prediction game runs every 5 minutes, right? This is on one of them is on something called PancakeSwap. The prediction game runs every 5 minutes, and it's tied to a coin, a Binance coin. Well, every round, a Binance coin right now is worth like roughly around, it's vacillating between $390 and $400, one coin. Every round, there's about 20 to 30 coins in the pot. So you're talking about every 5 minutes, there's $8,000 to $12,000 in play. So 3% of that,
yeah,
right? Yeah.
I mean, they're making money,
right? So
that's the house winning right there. Is what that is.
Yeah. So you figure, sheesh, man. Like every every 5 minutes they're getting $500 to $1,000, and that's on the low side, right? When it's really booming, it can be like 3 times as much. So they're probably banking tens of thousands of dollars a day.
Yeah, that's a whole giant digital playground, I guess, that we don't we don't see, right? Like people, I know Kofi and I have talked about a little bit of getting into NFTs and other stuff, but I'll tell you right now, I'm still not into it, right? Like I want to be. I understand it's a thing, but there's a lot of it's strange because to normal, I guess, maybe not normal, but to a lot of people, it's just not even a thing, right? Like it's just not even there. And there's the millions of dollars that it seems like that are transacting and going back and forth all the time. Along with that, like, so I guess it's just kind of overwhelming, right?
Well, it can be overwhelming if you try to, take on everything at once. Right?
Yeah, so it's awfully overwhelming for a lot of people, but it seems like, start with maybe like a Coinbase, do that kind of thing, get into it. I like your advice of starting small, even if you do have a lot of money to invest, throw the $500 in there, throw a couple $100 into it and see where that can go. Other piece of advice?
I'll tell you this.
What would you give me? Go ahead.
I'm sorry.
No, go for it.
If you let's say if you like brand spanking new, and it's like everything we're talking about, there's probably at least 6 or 7 ways to get paid in crypto. All right. And then like getting into projects can be, probably a little overwhelming for like the newer type of person. The best way, like stuff I'm doing, like trading the charts and trading markets, stuff like that, that's a little bit more advanced. Talking about NFTs, I would be cautious with NFTs because it's illiquid, meaning that like if I'm trading the markets, I can get in and out when I want. But if I buy an NFT and I'm looking to sell it for a profit, I have to hope that somebody buys it. So that's probably not something that that I want to do. But probably what I would tell people if they were saying, okay, I don't know anything, I want to get like going with it, I want to start making some money as soon as possible. The best thing to do is to get into what we call farming or staking. All right. Where this is literally where you take your money, bring it into the crypto sphere, and you stake it or put it in a farm, and that money earns money. That's it. You can unstake it. Most of them you can unstake it when you want, and you earn on that. Okay. Now you have some that are more riskier, but then you have some that are stable. All right. Like there's one. Let's see if I can pull it up.
I mean, that's no more different than retirement funds where they can say, do you want to go riskier? Do you want to go stable? Or do you all that, right? So same kind of thing. And I'm not saying to take your retirement fund, put it into crypto in case anybody's trying to say that. That's not what I'm saying. Although it seems super fun to play around with. And
I would take a portion of it and do it. It's all about managing risk. Yeah. But like this right here, this is one Anchor protocol. All right. And when you're looking for something in this, you want to look for stuff that have like a lot of value and a lot of liquidity, value. Like this is over 10 billion. So this is serious, right?
Yeah.
Okay. And the thing about this is that Anchor will pay you like close to 20% a year. Right.
So that's the one thing I want to like definitely bring up, and maybe you could talk more about this, James. What's this? Mm-hmm. I think people are scared of crypto because of how much it fluctuates. But the percentages you can just on staking alone, 20% a year is better than anything else you're going to put money into in the regular.
That's insane, right there.
Yeah. And this is actually, believe it or not, this is low, but this is also stable. Right. This is more your less risky. Like this is like your low risky stuff in crypto.
Never mind. Forget what I just said. Take your retirement fund, put it in this shit because you're not going to get that kind of return at all. That's ridiculous. Like 20%. Yeah. Wow. Okay, yes. Go on. Sorry.
No, it's cool. So it's things like this that you can do like right now. Now, obviously, okay, let's say you've been saving up for retirement, right? and you got, I don't know, let's just give a good round up. Let's say you got 200,000 saved for retirement. Man, don't go and take your whole $200,000. And and if you don't know, if you're unsure, like managing risk is just that. It's not gambling. All right. But this protocol has been like popping for a while now. And obviously people believe in it. Now, here's another cool thing is that some of these protocols you can earn on your money, but then they also let you borrow a portion of your money at a certain rate. So I could bring like some of them, I could bring like, say, I can bring $10,000 into it. And they'll say, okay, we'll pay you 20% on that. And then I say, okay, I think I want to borrow like 4,000. I say, okay, well, we'll charge you 10% to borrow that 4,000. So that 10,000 is still earning, and I can like go and do something with that 4,000 while that 10,000 is still earning, and then I can pay that $4,000 back later. And this is the cool thing about like some of these protocols and things like that. And it's because people, basically, we're all getting together and adding our money into the pool and creating liquidity. We're creating our own economy, and that's what kind of allows us to do it. So this is like more your stable one.
So who owns this? It's not a bank. Who owns that?
The people own it.
Okay, that's what I thought.
Yeah. It's basically you have a team of developers that create the smart contracts, and like they'll get their fees for creating it, but it's basically the people. It's something called governance, where the people decide what's going to happen with it.
Yeah, and
so same thing like
people
stuff like
you're talking about, it's all public record, right? Really, is what you're trying to say?
Yeah, it's all transparent.
Okay.
So everything works on the blockchain. You can see like transactions on the blockchain, which could be good or bad. I don't know, but yeah. So like everything that's done on a blockchain, you can see it, right? Stuff like this. So like with the NFT thing, you could like OpenSea. That's the major player for NFTs, the NFT marketplace. So OpenSea, it's funny, I'm talking this, it's right here. OpenSea, just for them being the facilitator, they just take a portion of the fee, right? And because people are saying like, okay, well, we're transacting all this other kind of stuff, then OpenSea just gives them a place to transact and things like that. See, like this. So if you were like just like brand new, let's talk about if you were like just brand new, right? And it's like, okay, I like that. I want to get involved in that. There it's not a huge learning curve. It's just taking your time. But if you're in the States, okay, you got to understand that there is a move to try and corral U.S. citizens to keep them from experiencing the benefits of crypto, right? Thank you. This is not to be considered financial advice. Thank you, Kel. All right. So you have to consider that. So one of the reasons that a lot of these institutions don't want to deal with U.S. citizens is because of the IRS, right? So they have made it very hard to buy crypto from anywhere, right? Sorry about that. I thought I had that on vibrate. They made it very hard to buy crypto from anywhere, right? So they only want to funnel you to buy crypto through Coinbase or like Binance.us or things like that. And the reason being is because these corporations, are connected to the government, and now the government can track what you're doing. It's perfectly fine. I'm not saying that you should evade taxes, you should pay them. But my personal opinion is that you should pay the minimum. It's like when Donald Trump pays $700, it's like, right, look, that's my own personal belief. Look, I don't know what y'all doing with this money. It never makes it back to my community, so I'm gonna give you as little as I possibly can, and I'm going to do better in my community myself. That's my own personal thought. But anyway, you just use these platforms as your on ramp into the crypto space. So, for example, I got $500. all right, I want to take advantage of some of the stuff in DeFi. You use Coinbase to get your money into the crypto space, and then you transfer out of Coinbase into your MetaMask wallet. Once you get it in MetaMask, now you can go stake it in some of these other protocols or whatever. When you're ready, you take it back out of MetaMask, send it back over to Coinbase, and now you can pay your bills or whatever. But yes, you do have to pay taxes on that. So I want to make it clear that I'm not trying to tell people to evade taxes or anything like that. So, but that's for somebody who's brand new. That's what I would probably say to like get into bring my screen back up, and I'll say this and then I'll come back.
I mean, and you're talking about mitigating risk as well as just learning curve, right?
Yeah. It's the same thing as if you were doing like stocks or a CD or something like that. It's, it's just the vehicle is different, right? So this is a popular exchange. It's called PancakeSwap, right? So if you go over here, you got two things: farms and pools, right?
Mm-hmm.
So I can go into here, click on farms, and I can put money in this, and it will pay me these rates, right? You can do the same thing with pools.
Mm-hmm. And you mentioned that most people are keeping their money in crypto.
Mm-hmm.
But like obviously people are trying to make money in crypto, and the way you make the money, really like the way you're able to use the money is you have to convert it back out or pay people with it. Right? How's that work?
Yeah. Okay. All right. Let me give you an example. All right.
Sure.
let's say I had $10,000. All right.
Okay.
And I put it in this right here. Right. This, I don't know why it's taking so long to show up. But let's just say why this coming. Let's say I put it in this. Right.
Okay.
And this is paying me 61% a year. Right. And it automatically, this auto cake means that it automatically restates my profits. So if I put 10,000 in it, and then like after my first go round, I had like $60, it will automatically restate that. And now I got $10,060 that's earning on it, so automatically compounds. All right. Mm-hmm. Let's say that, okay, I made 2,000 from this, and it's in my crypto, but I want to pay my car note.
Sure.
Could you? This is not to be taken as financial advice.
For sure.
I want to make sure I'm being clear about that. Could you take that $2,000, send it back over to Coinbase, and convert it into USD and transfer it to your bank account? You could. Or you could just take a loan out on that crypto instead.
Which is what you were talking about before, yeah.
Right. So you go to something like Nexo.
So that's kind of why people are all holding their crypto, because they're just taking loans against their crypto, is what you're saying.
Yeah. So I can go to this protocol, and I can take that money and I can stake it with them. All I'm doing is transferring from one wallet to another, right? So I have an account here, and I say, okay, I'm gonna transfer it. I use this. This is what it's called. This MetaMask right here, right? And I say I'm gonna transfer it over here, and they say, okay, fine. What we'll do is if you want to take a loan against it, we'll loan you. We'll give you a loan against your crypto. You stake the money with us, and I say fine. And they tell me, okay, this is what you get: loan to value. You can borrow up to 50% Bitcoin, up to 50% of Ethereum that you got staked with us. But in this case, let's say you're going to do a stable coin. If it's a stable coin, you can borrow up to 90%. Why? Because stable coins don't fluctuate. They pretty much stay around the dollar. They're pegged to the US dollar. So now I can basically, if I want to borrow 10,000, that means I need to have $11,106.37 on deposit. They say, okay, fine, stake that with us. What we will do is that inside your dashboard, when you're ready to borrow this money, we will give you a loan and send it to your bank account. So now I don't take my crypto out of
It never stops earning for you.
Yes.
So which is
Well,
good.
in this case, it doesn't. You don't earn on this one. This is a different protocol.
Okay.
But it's like, okay, now I never have taken my crypto and exchanged it into fiat, so to speak. I've kept it in the crypto sphere, taking the loan out on it, and then I can repay the loan back and get my crypto back without having to pay the capital gain taxes.
Okay. So where's the big loss here? Like when somebody puts a bunch of, their money, say I take, $100,000, put it into crypto, I put it down, I stake it in the ground, or I put a stake in there. I think it's going to, return 20%, but it doesn't somehow, right? Like it tanks and then I lose it all and then that's just gone. Like bring me through that, how that.
Not in crypto, because when you stake something, you still own the coin. So it always has a possibility of coming back, a chance to come back.
Right.
Like a stock, right? Okay. It's not like Forex. Forex market, if you take a trade and you lose, that's it.
Yeah,
right?
you're just done. Yeah, that's
but in this case, the only way that you can probably possibly lose money is that if the value of the coin that you're staking, if that loses value.
And stays lost and stays way down, right? Is what you're saying?
Yeah, if it stays down, right.
Yeah.
If it stays down, then yes, you've lost money, or the value of it has reduced.
Mm-hmm.
But it can come back, much like Bitcoin. Like Bitcoin in 2017 got as high as $20,000. In 2018, it crashed and got as low as $3,000. Well, if you'd have held on to weather that storm, which some people did, it wasn't like their money was gone forever. It just depreciated, much kind of like the U.S. dollar.
Or stocks, right? Stocks do the same damn thing.
Right, but now Bitcoin is rebounding and is at 3,000. 37,000 right now. So it's not that they've lost that money. It's just that the value of that token depreciated during that time. Same thing here, is that if it depreciates, then obviously it's not worth as much as it used to. But if you hold on to it, it has opportunity to come back all the time.
Right. But the interesting thing to me right now is the fact that you've taken loans out on things. So because I really, would love to be able to put money in there, earn money enough. I think everybody would earn money enough to make a house payment, right? That'd be cool. Right. But the thing is, you need to be able to have your money, earning enough money to be able to continue to grow without taking that out to be paying that house, right? To be truly paying for your house, I guess is what I'm trying to say, right? Rather than slowly knocking that back down. So, yeah, it's interesting for sure.
And this is probably where it gets a little bit more. I don't want to say challenging. It's about strategy too, right? Mm-hmm. Like most people, if they want to retire, they meet with a financial advisor.
Sure.
And a financial advisor tells them, okay, you need to, put $1,500 away out of your pension, your check every month for your pension, and put it into, IRA or something like that. It's the same thing here. It's just that you got to, do the footwork, and unfortunately, I hate to say it this way, but society has made a lot of us lazy mentally, where we don't want to, we go and we give all our energy to, a soulless job. And then we want to come home and we want to just flop on the couch and watch mindless TV shows. And it's like, okay, it's amazing now, man. We carry many computers around in our pockets, and we have access to more information than we ever did, which is a good and bad thing. And it's like, okay, just an hour every day, you could research certain projects, and then you just mitigate risk. Okay, all right. If I got $10,000, I don't mean just throw it into this one because it's promising you 37,000 APR. It's like, come on, man. that how are you going to sustain that, right? And you have no model or anything like that. You don't have so you don't want to do that, right? But you might want to say, okay, this one is offering me 500% APR. Well, it's probably not going to stay that way as more people get into it. They do that to attract new people into it. But as more people and more money comes into it, the APR drops. Okay, so if it just depends on what you need. For example, maybe the average house payment today is, I'm just going to say $2,000 probably. Well, it's all math. So what do you need to make $2,000 per month? If you don't have $20,000-$30,000 that you can just sit somewhere to earn that, then you have to find another vehicle, which most likely you have to get a little bit more involved in compounding that money, which can be done through like trading markets and things like that, until you get it to a point where you can put it somewhere and it stakes it. So it's ways to do it. You just have to strategize on how to do it, and it just depends on where you started from. If you don't have a lot of money, you're going to spend time. If you got time, you can spend money. So that makes sense.
Yeah, no, it does. It definitely does. It's the same thing. It's like working through a lot of the things we talk about on the show, right? Like you just have to learn it. You have to go through, and you can do well in it. You can be an expert in it, but you have to practice. You have to fail. You have to go through it and read the market and do everything else and learn about it. Just do that learning that you've obviously done a lot of, and I really appreciate you sharing that knowledge and your opinions, really. And like, again, not financial advice, but definitely some fun opinions on like how things work and how it's going. And no, I really do appreciate that part of it. Kofi, you haven't really had any. I've asked all the questions. You got any questions for him? I'm not done talking. I want to talk more. I really do. I know we're getting.
I mean, yes and no. I actually like listening to having you ask the questions, because I guess since I've been doing this for a little bit, I actually kind of know the basics, and like we're not like we can't get too heavy into this in an hour and a half. This might be like session 1 of
yeah,
10.
And James, actually, that was going to be another point I want to make. So you do coaching in this area, right? So I would be remiss if I didn't try to tell the audience, where can we find more of James, and like how can we hire you, or are you like taking on new clients? How's this go? Tell us about you.
And let me be transparent. I've just started probably. Remember at the beginning of our time, I said I was doing a lot of online marketing. Well, to bring it full circle, I really, I had started like doing a lot of online marketing, and I got burnt out. And so just to kind of pay the bills, I was doing like client work, like copywriting. And if you don't know what copywriting is, basically I'm the person that writes the stuff that make people buy stuff. And so I was doing that just kind of because I was like burnt out with like a lot of stuff. But trading and the markets, like always, kind of, just stayed with me. I'm a math head. I love math. I get chills walking by calculus books. I see the beauty of the universe in math. Everything is mathematical. So trading markets to me is like, I could, like these charts, I could literally stare at them for like hours, man, and never get tired. So I really like just kind of like I just kind of staying to myself. And I just recently decided to start doing coaching again. And so I haven't really set up like a website or something like that. One, because it's like I'm just trying to figure out what value I want to bring to the market, particularly with so many quote unquote experts out there that as I'm looking, I just don't think they know what they're talking about. Two, I'm in a place in my life as I'm getting older. I am not looking to be with everybody or just to get money, right? Things I do have to have meaning now. And so if somebody invests money with me, they have to at least get, I'm very big on making sure they get at least 2 times what they got in investing with me. So all those things I'm setting up now where it's like, okay, where it's going to be like official, where I'm saying, okay, this is if you want to, have a talk or conversation, something like that. I think the best thing to do though, in this particular scenario, something I actually been thinking about, which is now what you asked me, it's probably gonna put me on the spot. And you know what? I'm gonna commit to it. I'm gonna commit to it live right on screen since you've asked me now. I think the best thing to do would be for me to do a 1-day class here at Matchbox, like charge a minimal fee, like maybe like $100 or something like that.
Yeah, let's go, man. Let's go.
And like just have a whole day of like, taking people, from A to Z. Like maybe we can get like 10 to 20 people, in the first conference room or whatever.
Yeah.
And then we can just, we can kind of go that route. So, I'm gonna say it on screen. I'm gonna commit to doing that. I'm gonna commit to doing it. As a matter of fact, I'm gonna take it a step further. I'm gonna commit to doing it in the next 30 days.
There you go. There, yeah, I heard it here. Everybody watching, that's happening. And by the way, I may know 1 or 2 or 3 people that would be interested in taking that. So maybe we'll see.
Yeah,
yeah. I think that might be a thing. You shoot the sign up list. I'm sure that some people would be interested in hearing that.
You know, I've asked for forgiveness for this. Man, I have been like I have like been a person who's like, man, I just like, I don't like to tell. It's weird because I love helping people, but at the same time, I don't want to be bothered with it sometimes. And so it's the strangest thing, man. I love people, and I love seeing like people, you know, helping people get to where they want to get to in life. But it's like they get on my nerves sometimes. Like it's like, man, I just make my money in silence. You know what I'm saying? Like I'm walking down the street, you looking at me, you would never know. Like all the stuff I said tonight, you would never know it. And it's like there's a part of me that likes that. I like the simplicity of it.
Yeah.
But there's also a part of me now that I would have to tell you that as I'm getting older, and me seeing the grand scheme of life, I realize that it is not good for me to have all this knowledge to myself. It would be a shame for me to have gone through the things that I've gone through in life, to have overcome those things, which that's for another show, and have found the way out, have overcome quite a few insurmountable odds in life, and to have found the way out, and to die with that. You know what I'm saying? Yeah. So these are the things that, in particular with my wife, she's like, hey, look, you need to, and it's like, sometimes like, man, look, I just, you know, I don't want to be bothered, man. Just let me go ahead and go down to Florida, hang out at the beach, you know, and just kind of do my thing. And it's like, I can't do stuff like that. So I'm going to say it, and I'm saying it so that you two can hold me accountable. We're going to get together. We're going to put the class together, and I don't care if we got 5 people. We're going to do it. So.
That's
so
cool.
I'm gonna charge $100. I'm gonna charge $97 for the class, and it's gonna be an eye opener.
That's some marketing right there. Look at him.
There it goes. I like the 97.
Yeah.
97, bro.
I know the theory. I know the theory behind the 97.
It's psychological. I told you, man. I told you.
I want to learn
online marketing.
As far as marketing goes, like that is also a fantastic thing too. So anything you want to drop on the class about marketing, that's always fun too. But no, let's do that. I'm holding you accountable for sure. Right. I'm really glad that we asked this question, and for sure we're going to do it. Like I'll sign up. I'm telling you right now, you tell me the day, I'll be there.
We'll do it. We'll see. We'll probably do it on a Saturday, because I know that's probably better for everybody. Cool. So I'm gonna commit to doing it. I've been slacking on it, and I've been thinking about it for a while. And now you guys got me on it. I know if I say it out in public, now I know I got to do it.
Yeah, we got you. Kale's going to come down. I think Kale lives up near Chicago. I mean, he's going to drive his ass down here for a day because he wants to go down that rabbit hole. I guarantee you will. No, I'm speaking for him. Kale's a good dude. He's a good dude. But yeah, man, that's fantastic. Kofi, have we ever had convinced somebody to do something like that? Just asking them.
Nope.
Oh man, that was great.
Well, me and you.
Yeah, we commit to a lot of things on this show for sure. But yeah, James, again, thank you so much for coming on here and telling us all, and like all the information that you're saying. One of my favorite things about talking to you is the fact that I don't know a lot of what's going on. I don't know about all this stuff, and every time I have a conversation with you, it makes sense more. Right. And it's really good. And that's part of why I want to have you on here, is because you do a pretty good job of explaining it to me. And I'm hoping that translated to the audience here. I know Kofi's been into some of the stuff, like you said. So I'm glad nothing really went over my head. I feel like hopefully that for the audience, it didn't go over their heads, but also it made sense, and it makes it like you explained away everything. So that's great. I definitely know a lot more in this 1 hour. So thank you for that, for sure.
Hey, before we end it, I'll just tell you kind of like how I was like, okay, look, maybe I need to do some in space. When I should have said this at the beginning, but it's funny how I got here in the crypto thing. When it really started taking off in 2017, right? It was like everybody was like, man, you need Bitcoin. You need to get in Bitcoin. It's like we call it the grandma signal. When your grandma's cousin, second, twice removed, start telling about Bitcoin, it's like, okay, that's when you probably need to be like, okay, what the heck, right? So I was like, okay, at that time I'm still, very heavy in Forex, and it was like, okay, like now I've just like kind of bastardized Forex. It's like I haven't even looked at my Forex account probably at all, which I need to go back to. And I was just like, okay, you know what? So I go in like on these Facebook groups and everything, and I'm like, okay, well, how does this part work? Because I'm trying to see if what I've done in Forex, if I can translate it over to crypto, to the crypto market. And so I'm getting on YouTube and I'm looking at these videos and I'm just like, what's this guy talking about? And so then I go in like these Facebook groups and I'm asking these questions. Like nobody can answer the questions like that I'm asking, because the only thing I'm concerned with is how can I turn $1 into $2? Don't tell me, this about like this founder. And that's all. I just want to know how the money management works. If I can learn how the money management works, then I can put the system together to help me succeed. And so nobody could tell me, man. And I'm like, okay, you know what? Just screw it. Let me just get involved. So I took like maybe a few $100 and like signed up for an exchange and just start, testing stuff. When the market moved this way, I will buy it. And it's like, okay, if it moves this much, how much did I lose? How much did I gain? And that's kind of how I started figuring it out. So you guys are gonna hear a lot about me talking about my wife, because she always had to remind me of how differently I think, which I think my thinking is common, right? And she's like, bruh, everybody don't think like you, and like she has to like constantly remind me of that. So I'm just thinking like, hey, everybody's like, into this, and so I go back into these Facebook groups. And I post these videos and like, hey, look, hey, Bitcoin's right now is at 10,005. Hey, it's going up to 11.2, and then I'm getting out, and then most likely drop back to 10.8, and then if it holds 10.8, it'll go back up to like 11.5. And so I post these videos, man. This is true. I could show you like images of this, and man, it was like after that, like the DMs on Facebook was just like, you just thought I was crypto Jesus. It was like these people were bombarding me like left and right. Do I buy here? Do I get out? And that was another thing that kind of, that's probably making me say I need to do this, because I see so many people who don't want to think for themselves, and they want to like take these people advice that, it's like, man, I gotta know what you're talking about. You're gonna lose your money, And so that's what kind of led me in this route, where it was like, I mean, gosh, man, like every day I've had like 5-10 people. Should I buy? Should we buy now? Should we get in? Can you look at this coin? Can you do this, this, and that? And I'm thinking that this is common knowledge, but obviously it wasn't. So those are the things, some of the things that like the chart reading, everything starts with like the chart. That's going to give you the roadmap. And there's some basic things that you can learn just in the chart. You don't have to be a master of the chart starting out. But there's some basic things you can learn in the chart to let you know how you can have the best opportunity to get your money to make money. And those are things, that's one of the few things that we'll cover in the class. And another one that we will cover, right? Yeah, now I'm turning into the market. I'm turning to the sales.
No, I love it. You just fall right back in the market.
Yeah, another thing that we will cover is automated bot trading. So, but everything starts with the core of being able to know where you are in the market. And then once you have that, a lot of the other stuff falls into place. So yeah, we're gonna do it. We're gonna do it in the next 30 days, and it's gonna be good. It's gonna be really good. I'm excited.
I'm also excited. Literally, I'm messaging Kale like, "Hey, come down, stay with me tonight. Like, stay with me." Like that's literally what's happening right now behind that.
Kale, I'm gonna put it on Kale. You come. It's gonna be the best, one of the best $97 you ever spent. I can personally guarantee you that.
Oh man,
I'm going into the marketing mode again. I guarantee you personally. I guarantee you that when you guys are done with this class, you're gonna feel like you got over on me.
I mean,
I guarantee that. That's the kind of value that I'm gonna bring. I guarantee you that.
It might just be the marketing talking, but I believe you somehow. Like
no, that's look.
I know,
Okay,
I'm joking.
let's go into the marketing side. Listen, bro, that's how you make the money, man. You give so much value that people can't believe it. Because if I give you value at $97 and I give you $1,000 of value at $97, if I ask you for 2,000, you're gonna be like, man, it's a no-brainer. Or 4,000, it's like, okay, 4,000, this guy's gonna help me make money. So yeah, I'm gonna blow your mind. $97 is gonna do the next 30 days. Crypto investing masterclass.
I can see that you have a marketing background because I'm pumped. Kale's sitting here saying he's pumped. I love it. I love seeing it happen. And I mean, yeah, that's great. We are like well over time though.
Okay.
So, and I want to be respectful of everybody's time. Thank you so much for coming in. It was super fun talking to you. Kofi, thanks for hanging out for extra time. I know that you sometimes have stuff to do, sometimes you don't, but I appreciate this. But with that, James, one more, we're gonna have to keep an update on this class, right? I will have to post in this video like the link to the event, right? When you get that done, so anybody who's seen this can go to that. But Kofi, you wanna actually? I'll go first. I'll go first this time. Why not? I'm gonna sign us out. So yeah, I'm James Wulfgar, Matchbox Studio. I'm in the Matchbox Makerspace right now, and this is Maker Monday. Even though we talked a lot about making money on crypto, we do actually do 3D printing and a bunch of other stuff that maker-wise here in the space. So I'm here every afternoon and also by appointment on the weekends. We're in downtown Lafayette. And really, I really encourage anybody who, if you're interested in making, if you're interested in talking about like future technologies, NFTs and things like that, I will talk about that with you. I have talked to a lot of different people about it. I'd be happy to meet up with you. And yeah, we're down here. We're a full maker space, and I'd love to have you come down and talk to us. And Kofi, you want to go? Oh, we can't hear you.
I'm Patrick Kofi Awesome with Mojo Up Marketing Media. If you have any broadcasting or any needs of something like this, definitely feel free to reach out to me. You can find me on LinkedIn at linkedin.com/Patrick Kofi Austin.
Awesome. Thanks a lot, guys. And we'll see you guys in 2 weeks for the next Maker Monday.